Good morning, everybody. It is April 26th, I believe. We have some information. So, okay, we got a lot of economic data coming out today. We'll get to that in a second. Right now, let's tackle the futures. So, let me run you through what happened last night into this morning. So, what we had was a run up where we peaked out and bounced off this fib line. We declined, then we started to enter a channel in which we are now floating in. Now, when we bounced off here and bounced off here, I said, oh boy, it doesn't look like we could pass through it. So it kept fighting, couldn't pass through it. So, we do have to test downwards. We have to see what the lowest point it can go. As of now, on daily charts for the futures, we're still negative. We're still a doji. MACD's still negative. We're not out of the woods yet. You know, if you were a bull, you would need it now. We also have some stocks rallying on earnings as well, like for instance Facebook, which rallied into the close. And I made a couple videos last night, but I had a lot of technical difficulties yesterday, and the video that I did post just didn't have any information about that Facebook trade. Hold on, guys. Sorry. Yeah, no, let's okay. Sorry. Adjusting my monitors. Um, this is a horrible idea. Right in the middle of a video. Thanks, Mike. Okay, that's fine. Okay, great. So what we got going on also is is it's probably going to be a decline today. Honestly, that's what I'm looking at. That's what I'm seeing, guys. We're seeing a decline across the board. This is, again, we dropped too much, too fast, too soon with no negative MACD. That's not really a good sign. We're probably likely to get some support, but we'll see. That's what I'm expecting this bounce to fail. It is positive by zero point 0.9 on the daily. We're negative by 0.8 for the Dow Jones. Let's see what the comp is. It should be negative 0.1. I mean, negative 1. Yeah, negative 1.7. Even though we're positive, we're green candles. We've made green candles, but what that's telling me is that the stocks would have to go up tremendously from this point. And like right now, like Apple's on the decline. Apple looks like it's gonna have a horrible day. It has a lot of market capitalization. Amazon looks to be peaking out. We have, you know, I can go on and on. Google didn't look too hot. So with these names, on the fence right now, that means that they're gonna slide, and that's gonna make the rest of the market slide. Now, they said, Market Watch said, since Facebook rallied, it's gonna make the other tech rally. I don't know. It's when you spike up like that, you come right back down, and especially with this market, you get earnings, psh, you're getting fucking shorted to hell. That's really what this market does lately. Google spiked up pre-market, went right back down, and then the fucking stock dropped at like 2% or more or something wild. Anyway, so we got this with futures. We just gotta wait and see what happens to the open. Candles keep going negative and positive, but overall, I think the momentum is to the downside. Now, if we go ahead and just go back and look at a 1 minute chart, you know, again, we went too fast, too soon. We didn't get really down, but we're gonna have to see what happens. Um, we are likely to break this channel if you know, if something bad happens. Okay, Now let's get into the economic data. Now let's get into what is important first and foremost, guys. Okay, so what's important is the ECB is um, having a meeting today about rates, raising, possibly shifting monetary policy to more hawkish tones, um, because well, that's what I'm afraid of. You know, I want dovish tones. That's and I'm looking for the ECB to be more dovish because things are not looking as good as they should be. And basically, Market Watch did a great uh, write up on this. So right now, there are patience, prudence, and persistence. No abrupt QE end. Balanced risks. Tensions remain. Safe haven you are. Now, this is the most negative outlook. So we have dovish backtrack, dovish QE tilt, downside risks, risks intensified, level concerns. We're most likely to see a blend of these two policies. Um, it's going to be dovish, but no abrupt QE end. You know, you're going to see some downside risks, um, signs of pickup in underlying inflation, slight. Slight. You have it some places, you have it not. You don't have it in others. You know, so they would be more balanced. Their recent softening of leading indicators. That's basically what this means in soft terms. Like it's absolutely ridiculous. But anyway, I believe they come out at 7:45. It's 7:36 right now, so you guys got to pay attention to that. This video will probably get out a little too late, but at least you'll see it. Um, geez. So they believe that a 2019 hike is 60% chance with number two, and I would say realistically, this is what they mean, and this is what's actually happening. But what they're gonna say is more of along this second blue line here. Now, also, we have a lot of good information coming out today. So we got durable orders. This is all at 8:30, guys. So I got a lot to cover at 8:30. Durable goods excluding transportation, initial claims, um, international trade in goods, continuing claims, and advised wholesale inventories for March. These are all for March except for claims. Claims are uh, claims are for April. So we'll see what the direction goes in. We're supposed to get a increase for initial claims. That's bad. I'm pretty sure that means more people are looking for those unemployment benefits. Okay, we are looking for the increase in, well, looking for. I think orders though are declining if I'm not mistaken. So I don't know why there's such a huge increase. Not huge. It's freaking zero point 0.4 increase um, of durable orders. So I don't know. I don't see that being a major major win here. We're gonna have to see. I'm pretty sure manufacturing orders have went down. So I really, this data comes out so mixed, guys, that I kind of wonder what they're fucking doing. Anyway, let's go ahead and I just want to say I kind of like how Market Watch has lately, has been putting out some bearish articles. It's it's uh it's definitely relieving, but it's not not something that mainstream media really wants to focus on. Okay, again, back to futures. We're backing off. We couldn't pass it. Let's see what happens. We're probably gonna go back up. We didn't go too far down. We almost bounced off the bottom of the channel. We'll see where this goes. I expect this it's a fight in the channel until the open. Um, you know, if that's the case, then it's going to be a real tight battle because stocks are, people are going to want to push this market higher, and you know, that downward direction is going to uh, soften that upward tension. So, we have a lot of buying tension from yesterday, but it's at this point it's cooling down, and I am still suspecting us to have big bad drops today. You know, it I hate when I sound like a fool and I hate when I get things wrong, but I'm sticking with my gut with this one, and I'll let you guys know if the situation changes and develops into something where we go bullish again. But as of now, I'm going to have to let you guys go. Oh, let's talk about the market, what's going on in the market. So, oil, crude right now, light sweet crude, baby, is back up to 68. Kind of crazy, honestly. Let's look at a hour chart. So this hour chart shows that, it could be possible to go on another run right here, but it's, it could fail as well. And if it does fail, then we're getting lower highs. If we look at a daily chart, um, we are almost at the end of this run, but we have some bullish activity going on. I do expect, regardless of whatever happens today, I do expect us to go down and retest the 66 level, or yeah, the 66 level, and then keep going up higher. I do see $80 sweet crude, so that's pretty cool. Getting some expensive oil, expensive gasoline. You're gonna have to be spending more money on gas, less money on uh, you know things that you enjoy. So let's go. Let's just pull up some. Oh Jesus, the fuck! Come on. Sorry guys. Here we have gold. Pull up silver, and we'll pull up Bitcoin. So Bitcoin went ahead and is coming back off this high, but it is possible to get a bounce. We are at this simple moving average, so we could bounce a little bit, but I generally see this Bitcoin market going back down. You generally see the indicators going down, decreasing. Okay, so um, you have here silver in a tighter wedge here, getting squeezed. So we could see we're at the bottom of the barrel though. So I expect silver to decline a little, but I also expect it to come back up and be in that $16-17 range. Gold, on the other hand, is very interesting, guys. Very, very, very interesting. You see here, we've been having this bottoming out process at the 38% fib, and the 38% fib, as you know, guys, is critical. It's probably more critical than the 61. It's down lower, so you know there's not much room for it to go, but we're getting positive action, and right now we can't break through that 38. So, and like I said again, crude is possibly going to have a little spurt of energy and pop up here, um, and gold looks like it's possible for us to pop above resistance. And let's look at the dollar. The dollar has finally got. We're still got extreme. We still could go more possibly, but I think I see a $92 resistance level for the dollar. Son of a gun. Oh, you know what, guys? It's 7:44, and this video is 15 minutes long, so I wonder what the euro is. Like what ticker? They're saying it's down, but or they're saying it's slightly up right now. Well, they're saying the euro to dollar. I don't follow that. I would follow just the dollar. I mean, just the euro. Okay, here we go. Um, what? Here, go to the fucking article. No, we don't want that. Oh, what's this? Oh, Jesus. European central banks leave interest rate unchanged. So what is the outcome of this? Well, they're leaving rates unchanged, so again, if they leave rates unchanged, that's that's patience and prudence. So so that means the euro is going to be more of a safe haven. Now, shit, guys, this sucks. Okay, so the press conference is going to happen where he talks about it. All eyes on press conference. Can we see the press release? There we go. Thank you. Decided that the interest rate on main refinancing operations and marginal lending and deposit remain unchanged. Regarding non-monetary policy, confirms that net asset purchases at the current monthly pace are intended to run until 2018 of September or beyond, if necessary. In any case of the governing council sees a sustained adjustment in the path of inflation consistent with its inflation aim. The European will reinvest the principal payments for maturing securities purchased under the asset purchase program for extended period of time after the end of its net asset purchases, and in any case as long as necessary. This is dovish. We're gonna have to wait to see what the actual press conference says in the tone. This is the same, if not less dovish. So that's what we're looking at. And I will see you guys at 8:30. Thank you very much. And I just have to say that Europe is in much worse shape than the U.S. Um, so so for Europe to leave these rates unchanged is um, is a pretty bad sign. We're still raising rates, but we're doing it too late. So I think that's just going to end up negatively for us. But at least we'll have the ability to lower rates once we do enter recession. So on that bombshell, we're going to end here. You know, durable goods, durable orders is what we're looking for, as well as a whole bunch of other stuff. We'll get into the economic data and why it's good or why it's bad. So, you know, sit tight, guys. Um, Sit tight, and we'll talk to you in a little bit around 8:30, 8:40. Alrighty. See you later.